It's safe to say there is a lot of uncertainty in the market right now. And when there's a lot of uncertainty in the market, it's important to have some assets that'll actually protect your money and give you a solid return when the rest of the market isn't. So I think Duke Energy can do this, and historically has done this. So let's take a little bit of a look. Obviously today we're up 1.5%. When recording this video, that is significant. The S&P 500 was inverse that. You were down, like I said, 2% in VOO, or the S&P 500, and you're up about 1.5% Duke. It's not just a one-day trend. If we zoom out, well, we're about flat there. If we go the last month or so, we're down 5%. If we zoom out, we go from, mid-February, February 19th, we are down from 563. Excuse me, if we go and zoom out on this, February 19th, we are actually up. Isn't that crazy? I was trying to look for it. Yeah, February 19th, we're at 111. Now we're at 120. There's uncertainty in the market, not full-on recession panic, clearly, because what we are seeing, and we have seen this, and I've said this on this channel many times, when there's uncertainty in the market, there's worried about a bear market, worried about the market running flat for a while, just economy worries, people are going to take their money out of tech, out of scary assets, and put it into safer assets, what they view as safer assets. And people view things like utility companies, which is what Duke Energy Corporation is, they view it as safer. Well, why do they? Well, historically, it's not directly tied to the performance of tech and things like that, which are more tied to the economy. Utilities are going to be pumping out basically no matter what. Of course, now what I'm not saying is there's no macro event that can affect Duke Energy. I'm not saying that. But what I am saying is that the market, when it's worried, when it's panicking, when it's running flat, when there's economy worries, whatever it may be, people will take their money out of things like tech, higher growth stocks, smaller stocks that are riskier, have higher debt, things like that. They will take it out of those sorts of things and put it into things they view as more safe, less risky. And that's exactly what Duke Energy is. I've covered lots of stocks on this channel recently and even before when we were in, the bull market, when we were in the previous market over the last, 8 or so months since I've had this channel. Not quite that long, probably 6. But I've covered those stocks. I've covered them recently, I covered them before. Because I can tell you, it's not because I can predict the future, I know exactly what's going to happen. But I do know how the market reacts during certain times. And when we're in panic mode, people transition their money out of risky and into safe. That's just how things work. That's how it's viewed as. And Duke's Energy is viewed as safe. Well, why is it viewed as safe? Generally, these companies are viewed as safer because of the underlying businesses. They're generally more boring. They're generally safer. They're generally more secure. They don't have as much high highs and low lows. So you're a lot more secure. You're a lot more stable. Utility companies, that's what Duke Energy is. They're a utility company. They sell you energy no matter what. Yeah, it can go down, it can go up and down, but generally it's going to be relatively flat, and you're going to get your dividend from this company. Just like from Vici. The land isn't disappearing, it's not getting up and walking away. You're going to get that dividend from it. Something like healthcare. Healthcare isn't going to go away just because we're in a poor economy. It's not going to be, it could be affected mildly, but it's not going to be dramatically affected. Something like Apple, which sells the newest smartphone, they could see a dramatic decline in new smartphone sales. There's a serious hindrance on the economy. That's how these things work. The underlying businesses are viewed as safer. They perform better in bear markets. Now, aside from just the macro view of things, Duke Energy is a good company. And I can say this because they have performed well. They performed well short term. They performed well long term. They've just been doing well. So over the last 5 years, up 49%-ish in the stock price. But that's not including the about 3.5% dividend yield they have given over the last, well, that's what it is right now. But it's roughly in that same range. It was higher when it was lower, whatever it may be. So if you factored in, yes, you're probably right around performing where the S&P 500 has, maybe slightly less. However, we don't expect this company to outperform the S&P 500, at least over a long term. If they do, awesome, but that's generally not what I expect from my value companies. I look for companies that have a good shot of doing that. But generally, tech has carried the market last 15, 20 years, and it's probably going to into the future. That's a pretty safe bet. So we don't necessarily expect these companies to perform even at the market, the S&P 500 level, but if they do, that's great. And I like to pick dividend companies, I like to pick value companies, even companies in general that have a long track record of performance. I don't like to look much past 2000, but if we go back to 2000, we're up from 47. If we go to lows in 2003, you're from 30. Lows in 2009, you're up from 42. You factor in the dividend. I mean, we've basically consistently been going up since 2009. You wouldn't have even gotten really near it in any of the lows. 2015, you're at what looks like 70, high 60s a share. 2017, you're 75. 2020, we were hitting lows. 2023, see, it was doing okay during most of that bear market in 2022, 2023. It was hitting lows in 2023. That was mainly because rates were so high. And that's the one risk generally you see with this. Inflation is, it was not great reading. It was a not great month for inflation. Let's put it like that. It just wasn't. But it wasn't extreme. It was just a little bit higher than expected. If it were to continue on that trend, is what I'm trying to get at, this company wouldn't do as well, at least in terms of the share price performance. It would probably go down from here because people would take their money out of Duke and put it in things like CDs. Okay, why would I have my money locked up in the risk that is a company that can do bad, that can, in the worst case scenario, completely crumble for whatever reason? Maybe it's people are lying, that sort of thing has happened before, and you don't have that risk in a CD because it's backed by the federal government. So people generally, if there's high inflation, they're going to move out of Duke, put it into CDs. Definitely can't say that's a certainty at this point, but if you're really worried about inflation, maybe we wait a little bit because you can get it cheaper, which would be cool. Or just hold cash for CDs. I wouldn't recommend that. I generally do not do that. Of course, I'm not recommending anything. You guys do with your own money what you want. But the general market isn't worried about inflation, at least in the sense that it's going to dramatically increase rates again, because you can see other stocks that rely on dividends like Vici doing well as well. So at least that's what the market at this point thinks. So if you think the opposite, make a play on it. Do whatever you need to do with that specifically. I think that's all I want to cover in this video, guys. If you enjoyed, like and subscribe. I do daily stock content on this channel. I'll catch you next time. Thanks for watching.